What is an IRA? Seriously, do you know what an IRA is? Do you want to know what an IRA is? Do you know enough to really make money with an IRA? Kenner French with vastsolutionsgroup.com. We do tax, finance, and artificial intelligence for entrepreneurs. We lower taxes for entrepreneurs. We also help them for retirement. We've saved hundreds of people, actually thousands of people, hundreds of thousands of dollars, if not millions of dollars, in taxes over the 50 years. Please do not forget to like this video and subscribe to the channel. It's new. We'd really appreciate it. By the way, stay tuned and you'll get a nice little bonus here at the end. Now, you're probably asking, how much can I contribute to an IRA? The annual contribution limit for each year is dictated by the government. And I'll get into the specifics of all of this revolving around IRAs. Your Roth IRA contribution may be limited based on your filing status and income, by the way. See IRA contribution limits on the IRS website. Is my contribution deductible for your tax return? If neither of you nor your spouse is covered by a retirement plan at work, your deduction to a 401k or to an IRA is allowed in full. For contributions to a traditional IRA, the amount you can deduct may be limited if you or your spouse is covered by a retirement plan at your work and your income exceeds certain levels as dictated by the IRS. Roth contributions are not deductible. Can I contribute to a traditional or a Roth IRA if I'm covered by a retirement plan at work, you might be asking? Yes, you can contribute to a traditional and or Roth even if you participate in an employer-sponsored retirement plan. Those would include a SEP, a simple IRA, etc. See, now let's get into the discussions a little bit more about those specific workplace plans, by the way, because you might be covered by your company plan, and we can get really, really specific as we go into that. Now, let's talk about the very specifics of setting up an IRA, or for your spouse. How much can you contribute? Anyway, if you file a joint return and have taxable compensation, you and your spouse can both contribute to your own separate IRAs. Your total contribution to both your IRA and your spouse's IRA may not exceed your joint taxable income or annual contribution limits on your IRA 3 times 2, whichever is less. It doesn't matter which spouse earned the income. Both IRAs and IRA deductions have other limits. Check the website at the IRS, as a matter of fact. Let's go over some questions and answers concerning distributions while still working. Can I take money from a traditional IRA or my SEP or simple IRA while I'm still at work? You can take distributions from your IRA, now including your SEP IRA, simple IRA as an example, at any time. There is no need to show a hardship to take such a distribution. However, your distribution will be includable in your taxable income and may potentially be subject to a 10% additional tax if you're under 59.5. The additional tax is 25% if you take a distribution from your simple IRA in the first 2 years you participate in the simple IRA plan. There's no exception to the 10% additional tax specifically for hardships, by the way. Do I request the distribution check directly from my employer or the financial institution where contributions to my SEP or simple IRA are invested? You will need to contact the specific financial institution holding your IRA assets. Now, what if I withdraw money from my IRA before I'm age 59.5? Which forms do I need to fill out? A lot of people ask. Regardless of your age, you will need to file a Form 1040 and show the amount of your IRA withdrawal. Since you took the withdrawal before you reached age 59.5, unless you met one of the exceptions, you will need to pay an additional 10% tax on early distributions, and it would be on Form 1040. You may need to complete the attached form, which would be 5329, which is an additional tax qualification form. Now, I know, another form. It is what it is. Now, let's go over certain distributions from Roth IRAs, which are not taxable, by the way. Can I deduct the 10% additional early withdrawal tax as a penalty on early withdrawals of savings? The answer to that is no. The additional 10% tax on early distributions from qualified retirement plans does not qualify as a penalty for withdrawal savings. Will I have to pay the 10% additional tax on early distributions if I'm 47 years old and ordered by a divorce court to take money out of my traditional IRA to pay my former spouse? The answer to that is yes, unless, of course, you qualify as an exception you must still pay the 10% additional tax for taking an early distribution from your traditional IRA, even if you take it to satisfy a divorce court memo. Now, the 10% additional tax is charged on the early distribution amount you must include in your income as an addition to any regular income tax from income this amount in income. Unlike distributions made to a former spouse from a qualified retirement plan, i.e. 401k, under a qualified domestic relations order, there is no comparable exception. The only divorce-related exception for IRAs is if you transfer your interest in the IRA to a spouse or former spouse, and the transfer is under a divorce or separation instrument. Check the IRS for specifics. Now, however, the transfer must be done by the following: changing the name on the IRA from your name to that of your former spouse, if you're transferring your entire interest in that IRA, or a trustee-to-trustee transfer from your IRA to one established by your former spouse. Now, the specifics. Indirect rollover doesn't qualify as a transfer to your former spouse, even if distributed. That amount is deposited into your former spouse's IRA within 60 days. Let's go over RMDs. How much must I take out at age 72? Again, they're called RMDs, or required minimum distributions. Those must be taken each year, beginning with the year you turn 72. Now, by the way, 72 if the IRA owner died after December 31st, 2019. That's a new rule. The RMD for each year is calculated by dividing the IRA account balance as of December 31st of the prior year by the applicable distribution period or life expectancy. This rule does not apply to your Roth IRAs. You can determine your distribution period or life expectancy by using the table on this thing called Publication 590 that the IRS produces on an annual basis. Now, there are specifics. Call in the office. We can go over RMDs. Now, let's say I'm over age 72. Must I receive RMDs from a SEP IRA or a simple IRA if I'm still at work? Both business owners and employees over age 72 must take required minimum distributions from a SEP IRA or a simple IRA no matter what. There's no exception for non-owners who have not retired. The Secure Act made by major changes via Congress. Now, for plan participants and IRA owners who reach age 72 in 2020, the prior rule applies, and the first RMD must start by April 1st of that year. Now, for plan participants and IRA owners who reach 72 in 2020 and beyond, the first RMD must start by April 1st, the year after the plan participant or IRA owner reaches age 72. Let's talk rollovers and conversions. Can I roll over my IRA into a retirement plan at work? You can roll over your IRA into a qualified retirement plan. Let me give an example. 401k defined benefit plan. Assuming the retirement plan has language allowing to accept this type of rollover, the answer is yes. Roth IRAs can only be rolled over to another Roth IRA. Can I roll over my workplace retirement plan account into an IRA? Almost any type of plan distribution can be rolled over into an IRA except for required minimum distributions. It would make no sense. Loans treated as deemed distributions, that's important in some cases, something to think about, or hardship distributions, which are distributions of excess contributions and related earnings, a distribution that is one of a series of substantially equal payments, withdrawals electing out of automatic contribution arrangements, distributions to pay for accident, health, or life insurance, also dividends on employer securities, or S-Corp allocation treated as deemed distributions. For details, for all the specifics, website, IRS. Distributions from a designated Roth IRA account can be rolled over to another Roth IRA account or to a Roth itself. How long do I have to roll over a distribution from a retirement plan to an IRA? This is important. You must complete the rollover by the 60th day following the day on which you receive the distribution. You may be eligible for an automatic waiver for the 60-day rollover requirement if a financial institution caused the error on other conditions are met. Again, look for specifics. Now let's go over contributions to individual retirement arrangements and those relating to 60-day rollover specifics. And we'll do a question and answer. Can I avoid the additional tax on early withdrawals if I roll over a 401k distribution to an IRA and then withdraw that amount to use as a down payment on a house. Yes, you can avoid the 10% additional tax on early withdrawals if you receive a distribution from a 401k plan that is eligible to be rolled over into an IRA. And you meet all the qualifications for an IRA distribution for a first-time home buyer. How do I convert my traditional IRA to a Roth IRA? You can convert your traditional IRA to a Roth IRA by doing a rollover. You receive a distribution from a traditional IRA and contribute it to Roth IRA within, you guess it, 60 days after the distribution. The distribution check is payable to you, by the way. Or trustee to trustee transfer, you tell the financial institution holding your traditional IRA assets to transfer an amount directly to the trustee of your Roth IRA at a different financial institution. The distributing trustee may achieve this by issuing a check payable to the new trustee, by the way. Or also same trustee transfer if your traditional and Roth IRAs are maintained at the same financial institution, you can tell the trustee to transfer an amount from your traditional IRA to your Roth IRA. Let's go over a conversion to a Roth IRA, which results in a taxation of any untaxed amounts in the traditional IRA. The conversion is reported on this form called 8606, non-deductible IRA. You got to look at the IRS websites for all the specifics. Now, let's go over recharacterization of IRAs. This is big. What is a recharacterization of a contribution to a traditional or a Roth IRA? A recharacterization allows you to treat a regular contribution made to a Roth IRA or to a traditional IRA as having been made to the other type of IRA. A regular contribution is the annual contribution you're allowed to make to a traditional or a Roth IRA. Depending on the year, their IRS has specific numbers. Check irs.gov for specifics. Now, it does not include a conversion or any other rollover. Should note, how do I recharacterize a regular IRA contribution, I should say? To recharacterize a regular IRA contribution, you tell the trustee of the financial institution holding your IRA to transfer the money out of the contribution plus the earnings to a different type of an IRA, either a Roth or a traditional, in a trustee to trustee transfer or to a different type of IRA with the same trustee. If this is done by the due date for your filing of your tax return, including extensions, you can treat the contribution as made to the second IRA for the year, effectively ignoring the contribution to the first IRA, by the way. Can I recharacterize a rollover or conversion to a Roth IRA? Effective 2018, pursuant to the Tax Cut and Jobs Act, the answer to that is yes. A conversion from a traditional simple, SEP, or simple to a Roth IRA cannot be recharacterized. The new law also prohibits recharacterizing amounts rolled over to a Roth IRA from other retirement plans such as 401k, 403b, DB plan, defined benefit plan, etc. I said you'll get a nice little bonus for staying tuned. You've made it this far, and I appreciate it. Send an email to einstein@vastsolutionsgroup.com. We'll send you a copy of my book called The Entrepreneur's Manifesto, a collection of smart financial advice. Again, thank you for spending this much time with us. We really appreciate it. For disclosures, by the way, go call 888-808-8278 or check us out on the web at www.vastsolutionsgroup.com. Please don't forget to like this video, give us a little thumbs up, subscribe, if you will, to this channel. It's much appreciated. Once again, Ken or French, I'm so appreciative of you being here. Please remember, send an email. Hopefully you'll love this book. I know you'll love this book because there's so many bad pieces of advice out there for entrepreneurs. This will clear up a lot of it. This also outlines all the different articles I've written. And by the way, this is my second book. I have a third one on the way, but this will add value to you. Once again, Ken or French with vastsolutionsgroup.com. It's indeed been a huge pleasure, and thanks for staying tuned.